Welcome to the Brass Bell Podcast. Today we're going to talk about some very important things that happened in the market yesterday and today. We're going to talk about how Amazon missed their earnings report. We're going to talk about a quote-unquote exciting IPO from a company called Allbirds. And we're going to continue to talk about the supply chain chaos that is still hitting the United States and around the globe. So the stock market yesterday, the Dow Jones Industrial Average, did gain 239 points at a close of 35,730. Futures do look down today, mostly in regards to the supply chain issues that we are currently seeing. The futures are down 69 points, but I plan on seeing that plummet even further than that. S&P 500, it closed at a gain of 44 points, or about 1%. Futures do look down again today. I do expect that to continue to plummet. The Nasdaq was up as well yesterday at 212 points. Increasing, and then the futures are again down, most likely due to Amazon's missed earnings, but we'll talk about that in a minute. But futures are down 148 points, or about 1%. The Russell 2000, it actually opened with a positive, or it closed with a positive yesterday at 45 points, closed at 2,297. Which is good. The futures look down though today, so I imagine all of those previous gains from yesterday will disappear at the end of today. So I would like to talk about this the stock of the day, which will be Amazon for today, just because I do think it's important to explain why the Nasdaq is expected to fall today. So Amazon. They opened today at just about 3,300, which was a loss of, let's see, about 4%. And they did miss their earnings, which was kind of a big deal. They missed it by quite a bit. The expected price to earning ratio was $8.92 a share, but the actual earnings they reported was $6.12 a share, which is like a almost $3 difference. So that's kind of concerning. I would expect Amazon to either resurge today, because Amazon's a $1.72 trillion company with a price to earnings ratio of 60. So it either will rally today with better hopes of a better tomorrow, or it will continue to see a loss today. We'll find out. We'll continue to look at this and see how that goes. But moving on, I'd like to talk about a company that is going to be going to do an IPO here in the coming week or so. The company is called Allbirds. The ticker will be BIRD, BIRD. And what this company is they're an apparel and fashion company that specializes in manufacturing eco-friendly wool shoes. Its estimated valuation's about $2 billion. I did read about most of the SEC filing, and there's a couple of concerns I have with this company. One being that the amount of competition that this company has is pretty substantial. Like, if you would think about like a company like Nike and Adidas and that are direct competitors with Allbirds, I find that their capitalization on the market is kind of lacking, and another concern I have is they're not making any money. It's another IPO that's not a profitable company at all, and I don't know whether they'll ever make any money. But that's always the concern. Now they do say that their estimated amount of gains from going IPO is only about between 1.4 million and $2 million, which isn't huge, to be honest. I was hoping it to be a little bit more like 150 million, but we'll just have to keep an eye on them. I did a fair bit of research to see if there was any kind of hype around this company. So of course I did look on Reddit, and what did I find? I find very mixed opinions about it. And the only positive opinions I found about this company was that they liked the shoe, that they owned maybe a couple of pairs of shoes, and the other opinions I found about it was that positive opinions was like this is going to be like a swing trade opportunity, that like the IPO will spike in the first day, first couple of hours to possibly around like $50 a share, then that they would sell out of that position. So, in my opinion, I definitely would not buy into this company. It just the financials aren't there, and the hype really isn't there. We might see potential gain in like the first few hours, but I wouldn't expect the price of the stock to open with a positive on the very first day. I would say I do expect that it'll trade at a loss for at least the first week, but who knows with this market. It's possible that they in the coming years that they will go positive, that they will make some money, but we'll just have to see. To me, this company isn't anything special. It's just another shoe company. It's just another apparel company, which honestly the market's being dominated by Amazon and by other online retailers. So I'm not seeing this company going anywhere in the near future or in the long-term future. Definitely would skip out on this IPO. So moving on to some news that might be affecting the market today. I did get a comment yesterday asking about the supply chain issues and what that would mean in the market in the coming months. And just like as we saw with the Amazon missing their earnings, I do expect more of that coming in the fourth quarter as companies report their earnings in January. That we'll see like the holiday rush will be kind of a disappointment this year, as more and more companies are not being able to meet the demand as Amazon has. Like I've been trying to find a coat on Amazon for weeks now. All the ones that I've been looking at have been out of stock, and it's been really disappointing. They're not going to come until like the very beginning of December, which honestly it's getting cold here, and I can't wait that long. So that's been my personal experience. That doesn't mean a whole lot for the whole market, but if Amazon is missing their earnings because of the supply chain issues, I will see that more and more companies will continue to do that, and maybe investors will wake up and realize, hey, this might be a problem, and start selling everything. So it's possible that the market may continue to hit these lows, and it's also possible that that this supply chain issue is only a short-term thing, and that in the future the supply chain issue will be resolved, and companies will continue to be as profitable as they have been in the past. I will say that if the market does go down because of these supply chain issues, it would be a great time to buy, because these aren't going to happen forever. But what I am concerned about is that is these shortages of truck drivers. That's something that I am concerned because this isn't necessarily about a supply chain issue. This is more of a labor issue, which, as we talked about yesterday about raising the minimum wage and whatnot, this could be the reason why some of these companies are raising their prices of labor is just because there's not enough labor to fill these jobs. So competition increases, and we're seeing that with these logistic companies, which is a huge red flag for for the economy. The economy is continuing to slow as a whole, and that is concerning. Like this is reporting from CNBC that China, this third quarter GDP grew about 4.9% from the previous quarter, which is less than expected. And then, let's see, just gonna check America's GDP real fast. And in 2021, the third quarter growth was only hitting about 2%. We were expecting like between like 4 to 8%, and just a whopping 2%. Again, that's kind of a concern. Um, so I don't know. It's hard to say for exactly what is going to happen in the future for sure. But I'm not very hopeful for the last quarter of the year or into the first quarter into next year. I will say that things by quarter two, possibly even quarter three, might to be a better outlook. But when the market is down, then is the time to buy. I'm not one for doom and gloom, so I will be expecting the economy to rally once again in early early or mid 2022. But my main concern is these labor shortages that that are happening. Because if people can't, if companies can't fill jobs, that is going to be a problem. That is going to affect their companies long term. Because if people can't do the work, then that'll affect people's or the company's profits, and we might have to be adjusting that as time goes on, our expectations. So that might be just a little bit of a concern going forward in the future. But there is one more thing that I wanted to talk about today before we wrap up, and that is Facebook has decided to rebrand their name to, get this, to Meta. And I don't know if I particularly like the name, to be honest. It sounds pretty, I don't know, marvelly, I guess. But so this is they're planning to change their name, I believe, at the end of this month or next. No, it was December. Excuse me. At the very beginning of December, with the ticker. The ticker will change in December 1st to MVRS. And obviously, just because the name is changing doesn't mean that any of the fundamentals are changed. And the reason that that Facebook, the company, is renaming themselves is because they have more than one product. They have more than just Facebook. They own WhatsApp. They own Instagram, and Facebook on top of all of those. So that's why they're rebranding. It's the same thing that Alphabet, they rebranded early on because they had more than one product as well. And they didn't want to just be Google. They wanted to be a company that could earn money in a multiple of ways. And then here Facebook is doing the same thing. Do I love their ticker name? No. FB was OG for sure. But the new name Meta, it's gonna be a good thing to see for sure. And I personally really like this name for them, because they are the Meta of social media for sure. They're not ever going to go away. Instagram is still extremely popular, and Twitter and Snap are just going to remain just like one product. I don't see them ever expanding. So Facebook is definitely going to be on top of things for sure. And that is it for today. Again, thank you for tuning in to the Brass Bell Podcast. My name has been David. Thank you so much for joining, and we will see you on Monday.